Cryptocurrency market has been creeping up this year, and actually the Bitcoin price, as I record this, is more than 2.5 times what it was at the beginning of the year. So then what we become more worried about is the tax effect, because gains inherently might be subject to capital gains tax and maybe other income taxes. So in this video I want to look at the taxation of Bitcoin and other cryptocurrencies. Before we look at how crypto is taxed, let's have a reflection on the whole tax system. So we have in this country a self-assessment tax system, self-assessment. So the clue's in the word. So when you do your self-assessment, you yourself are assessing how much tax you pay, and then you pay it. So as a taxpayer, it's your responsibility to fill in the forms, it's your responsibility to pay the tax, and then the revenue can check it, they can deign to check it. And they do check it, they do an awful lot of checks, and they do an awful lot of automatic checks. If you do a tax return and it has your salary listed, they will check that against your employer and the returns your employer have done. If you've got a whole load of interest, they'll check it from the returns they receive from the banks. And in relation to crypto, they do have communication, I believe, also with the crypto exchanges, so you need to be aware of that. But the duty is for the taxpayer to admit to the tax and pay it. So another little bit of sort of history, just to put a little bit of context, is that stocks and shares have been around obviously for hundreds of years, and the financial institutions, bless them, have come up with all sorts of complicated derivatives. A lot of the complications within crypto and Bitcoin and things that people do has already been done in a very similar way with stocks and shares. And the tax treatment of stocks and shares is settled and old. I mean, I know that crypto is not not old, but therefore the way in which it's taxed is consistent, in my opinion, with the way that stocks and shares are taxed. So there is a common thread and actually a common history. So although it's a new thing, it can actually just a copy and paste from something that's actually rather more ancient. Coming on to Bitcoin and other cryptocurrencies, I think that the biggest trap that people can forget about is when the tax point is when you make a capital gain. You know, if you sell some Bitcoin or transfer some Bitcoin into Ethereum, into something else, which people tend to do as you get into a bull market, because very often the Bitcoin goes up and then the others fall behind and the others catch up. And if people want to play that game, there are taxable transactions, and the tax point is when you transfer, say, Bitcoin into something else like Ethereum. So it's at the point you transfer it, not at the point you convert it into sterling and then send it from an exchange into your bank account. It's the point at which it changes its form. And that can catch people out, and it can also make your tax return very complicated, because if you're day trading, oh my, you can get a lot of transactions, and the tax treatment can be quite difficult to pull together. But overall, if you've got gains and losses within a tax year, you can net those off. And the important thing to remember is that on the 5th of April, the music stops, because that's the end of the tax year. So if you make a loss on the 6th of April, you cannot carry that back against a profit in the previous tax year. So you start again, and losses then that are just in the new year, you can carry them forward for that year and into future years if you can't offset them all, but you can't carry them back. And I think that can cause problems, because if you've made a whole load of gains in a year, got those gains in the cryptocurrencies, and then you wait, you haven't converted it into sterling to pay your tax bill, you wait till later on the year, the market crashes, and then you might not have enough sterling when you convert it, or you might not even be able to convert it. You can't convert it enough into sterling to pay your tax bill, or you have to use a ridiculously large amount of your gains in order just to pay your tax bill. And we don't want to do that. So having the sterling available after the 5th of April, or on the sort of the date, 5th of April and afterwards, is a really good thing to do. I think capital gains is the biggest problem that people have, but you can get income. I haven't heard about it just so much as I did a few years ago, but you can get income by using your tokens of various sorts. That is possible, and that generally is treated as other income. if you are receiving something, it's likely to have a tax consequence. So if you're not sure, then let us know and we can just have a think about it and how it should be taxed and if it should be taxed. Because it is really important to get the tax right. It's really important to get the tax right because it's important to comply with the law. We are citizens of this country. It's important to get the tax right because if you do ultimately want to buy a house with it, you need to prove where you got the funds from, and having it on a tax return is not a bad idea, to say the least. And in any case, the revenue can check it, because if it's on the exchanges or it's going to your bank account, and if it's not going into a bank account, then what's the point of it ultimately? So I think it's really important. So what are the big takeaways about taxation of Bitcoin and other cryptocurrencies? It's important it is self-assessment, so you have an obligation to make your own assessment. The 5th of April tax deadline is important to make sure you have the sterling available, and transferring from one currency to a different currency is a taxable event, so don't forget that. It's not when the money comes into your bank account. So thank you for listening. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, then please subscribe to the channel, and if you press the like button, it helps me and the channel, so thank you for that.